Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, September 27th, and we're going to take a look at crude oil and more specifically kind of the price action that happened after the EIA Petroleum status report that comes out every Wednesday at 10:30. And this is one of the trades that we look for every single week. And essentially what we do is we first identify which direction is the market heading overall. Okay? Is it overall moving higher or lower? So we look for it to pick a direction. And in this case, this is where our report came out, right over here. You can see where we went from moving sideways to lots of volatility, and then we just kind of started to break out and trend. And we wait for it to kind of settle down, and then we look for it to consolidate. And a lot of times it's either going to form a pennant pattern where you have a narrowing range, or you're going to have a micro trend, which is what we had today, along with a pennant. And you're going to look for it to consolidate, and this should all happen within about 15 to 30 minutes of the report coming out. So it comes out 10:30. We should normally have this setup occur before 11 o'clock. So in this case, here's where the setup occurs. So we have a direction, we're trending lower, we have bearish momentum coming down, we have our red momentum trender saying, okay, market has a strong downward move happening. And then we go into consolidation, and we draw this trend line on the higher pivot low within the context of the overall downward moving market, and then you look for the breakout of that trend line, which gives you an entry right around 89.90 area. All right, and then you proceed to accelerate lower until momentum dries up. You can see our histograms just kind of die off, and we end up getting a bullish divergence, and it reverses back up. But that move right there is good for about $200 to $250 per contract, which isn't bad, especially if you're trading a couple contracts at a time. And they should happen very, very quickly. The way this setup works is it's a breakout trade, and we're really looking for a brief pause basically right before the market goes, all right, time to keep pushing. So this is that pause, that consolidation, and the breakout is the resumption of the move, and it should follow through pretty quickly, just like we did in this case, and get you in the money very quickly. And the reason we like this is because it gives you a good reward risk ratio, because we can use a very tight stop if we do not expect it to hang around very long. It should break and run. So you're looking at about a 5 or 10 tick stop on the trade at the most. And then we're looking for it to take off and make anywhere from $150 to $300 per contract. And you stay in until your momentum dies off. So that's it for today. This is a great strategy to use. Again, we look for it every single week during the EIA report. I hope you were in the room today and you were able to take advantage of it. But that's it for now. And don't forget to click that like and subscribe button. And until next time, happy trading.